Okay, so I'm going to share my screen now. Hopefully everybody will see it. Let me know if you see my screen. The internet connection is unstable. Oh, wow. Let me know if you see my screen. Just feedback if you see my screen. Okay. It's okay. Okay. Awesome. 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 Thank you. Right. So what I'm going to try to do to this this section of the night is to now we've got Moses here. Moses is just this is his first time of coming. What I try to do on Sunday nights now since I think the end of October is at the end of October there was daylight savings time shift across Europe and the northern hemisphere. And so what that meant was prior to that, the UK time and the Nigerian time were about the same, and Europe was 1 hour ahead of us. And Kenya as well were about the same. I think Kenya right now is 2 hours or 3 hours ahead of Lagos. But we normally track the UK time. And the UK market open time is usually 10 p.m., which meant that once the time shifted, UK came 1 hour backwards, which meant that for Lagos, it became 1 hour ahead. And so that 10 p.m. in the night then became 11 p.m. in Nigeria. And it's, I believe it's 12 midnight in Kenya. So kind of went a bit really late. But anyhow, what I try to do then is to actually have the meeting room open 1 hour before the normal time we will use. So that means I have this open now at 9:30, and it will be open until 11:30 Lagos time. So 1.5 hours ahead of the market open, just to see if we can at least get some of us who have to go to sleep, like Irene now, it will be almost 12 midnight. So she will need to go to sleep, but at least if I can catch some questions, if I can teach a few things before that time, then yes, why not? And so what tends to happen is a lot of folks then join in later on, just before the market opens. But this time is usually good for training and for answering questions. And so I'm just going to open up the meeting and try to teach something very quickly and something very basic. And that is if I see a trade opportunity, how do I calculate my risk, which then should control or which then should determine the size of my trade. Because I tend to ask this question, and can I get some feedback from you for some answers? Let me ask it now. Now, if I have this as an entry price, so this here as entry, right? And I have this as stop loss. So for a sell trade, so I'm expecting price to kind of move down. Yeah, and I have that as my stop loss. Yeah, stop loss. And I have another opportunity with same entry price, so same entry price, but in this case now, the stop loss is around here. Yeah, so once again, this is entry and this is stop loss. And I'm expecting in both cases price to move downwards. But we have to also consider our stop loss in case price goes up against us. So if you look at those two, which one would I lose more money on if price goes against me on both of them? Which one would I lose more money on? Feedback, please. Moses says the one on the right, okay? Anyone else? Chidem, I'm not hearing your voice. Let me get some water. Okay. So Moses says the one on the right. Irene, what do you think? Right. I'm not getting, and I have, who else has joined us? Oh, Mrs. Remy, how are you?
Good evening.
Good evening. Longest time.
Wow. Well done.
Thank you. How is
So
it
I think
going?
Moses, good.
Good,
I
good,
align
good.
with Moses' observation. Yeah.
You align with Moses' observation. Okay. Awesome, 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 awesome. Now, let me see. So we are saying that with this, because it appears this is wider, right? That this is going to give us more losses. But what if I said to you that for me, I will not lose any more on either case?
Depending on the lot size.
Ah, now you're getting to where I'm going to with this. So I will not, because what I tend to do is for each of my trades, depending on the trade, depending on the account, depending on the strategy I'm trading, but typically I'm only risking 1% of my account for any trade. So irrespective of the size of my stop loss, I'm going to be risking 1%. So if price goes against me, I will only lose the same amount on the account. If both of them happened in the same time, I will only lose 1%. And so someone will say to me, how is that possible? The only way it's possible is exactly what Mrs. Remy said, which is it's going to be connected to the trade volume. So in this case here, for me to lose only 1%, it means that my trade volume has to be smaller than the trade volume here, which then means that I will eventually lose only, lose the same thing, but the trade volume will be different. And the good thing as well is if I have a stop loss like this and I have price going in my favor, it means that I need to only move a smaller distance to make much more money than if the same thing happened here and price is in my favor. I need to move a bit more to be able to make the same amount of money. But either way, one of the most important things you want to consider is you don't want to lose your account more just because the stop loss is wider. And this is one area that a lot of traders miss. Now, the argument is if I'm trading smaller size here, I'm not going to make a lot more money. But I'll say that the more important thing is to protect your asset. That is one of the jobs every trader has, is protect your money, is the rule of the game. So let's now put some numbers behind this as an example. Let me clear some of this. So if we're looking at this example here, again, this is a tiny example. Any questions, by the way? Does anyone, Moses, do you understand what I've just said now? Mrs. Remy, do you understand what I've said? I know you did because you talked about lot size. But Moses, do you understand what I said? Awesome, awesome. Yes. Okay. So according to the 5TT wave strategy, if we have the wave above the 89 EMA and price now comes back down and retests the 89, the what do you call it, the wave, then we want to be looking at taking a buy trade, which means in this example, again, this is hypothetical because we were not following this. The entry of this would have been around here. So the entry price would have been around here, and the stop loss would have been about a couple of pips below the 89 EMA, so around here. So this means that this is going to be my entry here, and this is going to be my stop loss. Yeah, does everyone understand what I've done now?
Yes.
Awesome, 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 awesome. So that means then what I want to check is what is the size of this in pips. Yeah, and one of the ways, the easiest ways to do this is, you know, you can get your crosshair. So your crosshair is at that end there. So you can grab your crosshair and you can check what your entry price is. So in this case, the entry price is 1.29234. 1.29234. 1.29234. So if I type that out, that'll be 1.29234. 1.29234, right? And then my stop loss will be 1.29107. 1.29107. 1.29107. So that means then that my stop loss is what? The size of my stop loss. So this distance here is the size of my stop loss, and that will represent the size of my risk. So the size of my stop loss will be what then? It will be 1.29234 minus 1.29107, which will be 1.29234 minus 1.29107. And that is 0.0012 or 0.0013. So that is equivalent to 13 pips. So this distance here is 13 pips. So that's what my risk is. Now let's assume I have an account size that is equivalent to, say, $1,200. So if my account size was $1,200, if you remember, the way to calculate risk is, or the way to calculate risk is equivalent to risk in risk in dollars or whatever currency your account is equivalent to the lot size, lots times the stop loss pips, yeah, times the pip value of that currency pair. Yeah, so the risk is equivalent in dollars, is equivalent to lots times stop loss pips times pip value. Do you remember that? That's, I don't want to make this very complicated, but that is as simple to understand. If you're with me, please, a Y, a yes. If you're with me, please, a Y, a yes.
Yes, it's clear.
Awesome, 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 awesome. Okay. And so that means for me to calculate my lots, it means that my lots then, substitution maths, will be equivalent to risk in dollars or whatever currency divided by the stop loss in pips times the pip value. Are you still with me? Yeah. So that's the risk in dollars divided by stop loss in pips times the pip value. And if you remember, I gave you a web page where you can find pip values of currency pairs. However, as well, most of you, if you don't have it already, just let me know. But most of you already should have one of our indicators that I use for recording or for displaying pip value amongst other things. And I'm just going to pull that up now. Okay, so if I go to indicator, the indicator list, you'll find that there's this thing called 5TT trade information. Now that just makes it easy for you to be able to see some of that information. So it's just a standard, what do you call it now, indicator that I wrote a couple of in 2013, going to 6 years now. But that makes it easy for me to see some of this data on the screen. So you can see now on my chart, I have a couple of comments on the chart. And what I have there is range today. So the range of that currency pair on the current day, the average true range of that currency pair, the average true range against the range today, which means that today that price has gone 93%. Now that day is on Friday because the market isn't open now. So that on Friday, that currency pair, GBP USD, went 93% of the 20-day ATR. Now, this is pip value here. You can see the pip value, right? If you can, please, yes or Y, so I know that you're with me here. Yes or Y on the chart, in the chart. Okay. Okay. Yep. Thank you. And then we also have the spread on that currency pair at that time when we had the last tick in the market. So that would have been the last, what time would that have been? That would have been by 23.54. The spread on that currency pair at the time was 11.5 pips. And this is just the date. So that's today's date on this place here, but the market isn't open. So this is the last market information on numbers, okay? So if we can then substitute some of these as numbers, if you look at my lot size, to calculate my lot size would be risk in dollars over stop loss times pip value, yeah? So how do I work out my risk? I want it in dollars. If we said that we only want to risk 1% of our account for every trade, so 1% of 1,200 is what? 1% of 1,200 will be 1 over 1 times 1,200 divided by 100 will give us $12, which means if I'm going to substitute this lots here, this will now be equivalent to, that lot size will now be equivalent to risk being $12 divided by stop loss in pips. Remember, it is 13 times pip value. Remember, on the indicator here, it tells us the pip value on GBP USD is $10. One standard lot is $10. So if we did that maths, it will be equivalent then to 12 divided by 130. So if we check that out now, it will be 12 divided by 130, which gives us 0.092. But because lot sizes are in 2 decimal places, it will, we are safe to go 0.09. So for this trade now, I will need to take a 0.09 lot size, which will mean that if price goes against me, I will only lose 1%. Remember, it's only 1% of 1,200. So I will only lose $12, maybe plus spread, but yeah, plus or minus the 1%. So, which then means for me to take that trade, all I need to do then is new order. So new order, and in here, I have the currency pair GBP USD, and in the volume here, I then need to put in 0.09. And if the market were open, what I would then do is a buy. But the market is closed, so I can't do that. Any questions? Is this clear how I calculated that? Should I give another example?
It's clear.
Awesome. Awesome.
Yeah, this is actually what I wasn't doing. If you remember, when the sorry to interrupt your presentation.
Yeah, no,
When the gap indicator was installed for me, you know, I kept expressing the fear that I didn't want to do more than 0.02 and all that. I think
yeah.
it was based out of the ignorance on this particular aspect. Yeah, thank you.
Awesome. So I'm happy you find this useful. So that is a formula. So maybe I'll do another example to just see if it helps. Again, so I'll clear this whole thing. Okay, and let's see if we can search out another example. Let me see if I can search out another example. USD JPY. Will I get the chart load? Okay, there was no opportunity there. Is there one there? USD card. Come on. Okay, is there an opportunity there? Now, where is my 89? No, my 89 is in the middle, so that's not an opportunity. Oh, so this, oh, yeah, so this is a potential setup, a potential what? Sell setup. So sell, but right now price is down here. This is where the band is up here. The price is down here. So what we want is to be able to wait for price to come back into the band. So we want price to move back down into the band, and then we will take a sell and follow price and come down. Does that make sense? Yeah. So if I want price to come back down, it means I should be in reality using pending orders. But just for the sake of us to calculate some of this risk, so that you can see how I approach this, I'm going to just calculate it here and ask and then determine what size of trade I'm going to take. So what are the constants we know? Our account balance. In this case, we want it to be $1,200, right? What else do we know? We want to risk only 1%. Percent risk is we want to do 1%. And so dollar risk will be equivalent to 1% of 1,200, which is $12. Yeah. And then what other constant do we have? What other constant? PIP value on AUD USD. You can see on this indicator that PIP value of AUD USD is also $10. Is also $10. And what other constant do we have? Now we have to determine what the stop loss pips is. So if you look here, I'm just going to assume that this is because the market isn't on. So I'm just going to take my wave around that level there. So I'll show you where I will take the level. So this is my wave here. So I'm going to take this level as my potential entry. So remember, what I'm trying to do here is for price to come back down to this level, fill me in on the trade, and then I follow the price down, back down. Yeah? So that's the level I would choose for my entry. And my stop loss will be a couple of pips above the 89 EMA, which I will kind of represent now. So a couple of pips above here. So that is that level here. So my stop loss then becomes, or my risk then becomes this. And we want to find out, figure out what it is in pips. So the stop loss level is 0.6769. 0.6769. So 0.6769 is the stop loss level. And the entry level is, again, we'll grab our crosshair. And the entry level is 0.6764. 0.6764. 0.6764. Oops, that's not 0.6764. Okay, so that means then, whoa, that's a very small stop loss, you know. Wow. So you can see in this case now, the stop loss now, the stop loss in pips, or the risk in pips, will be what? 0.6769 minus 0.6764. That we can see is only 5 pips. Are you with me? 5 pips. It's only 5 pips. Now, some people will say, oh, that's a nice trade because it will allow me to take bigger lot size. But with trading, I like to be very sensible because a 5 pip stop loss is so small that price can easily fluctuate back 5 pips and take you out on a trade that maybe you should not be out on. So what I tend to do is, even though the rule of this strategy is a couple of pips in a sell trade above the 89, but because it is only 5 pips, I will most likely move this stop loss to at least 15 to 20 pips, or follow the last price structure. And if you remember, when we in some of our evenings that we've discussed this, when you have price doing this, an impulse leg, a retracement, impulse leg, a retracement, impulse leg, retracement, impulse leg. So this is what you call an uptrend. So these levels here where price is actually making reversals are structure levels. So these are all structure levels. And in this example, which is an uptrend, at those levels are where you really want to, if you can spot these levels, is where you want to take buy opportunities. Yeah, because those are the most discounted levels of price in the up move. Because price was here, made a move down. So you want to buy at this discounted level and follow the price when it moves up. Same down here, you want to follow this price till it moves up. Have I lost you? Or are you with me? I hope I'm with you guys. You're with me, yeah? Feedback, please.
Yeah.
Yeah?
Yes. It's
Moses. Thanks, Mr. Remy. Moses, Irene, Chidima. Yes, just type Y in the chat. Okay, yeah. Good job, Moses. Yeah. Yeah. So when you have this structure levels, it means that these structure levels in themselves are levels of support and resistance, because you can see price went up, hit that level, bounced down, got to this level, hit this level, and then bounced up again. So those levels are actually levels of support and resistance. So in a case like this example I have here, where my stop loss is only 5 pips, I don't like to trade only 5 pips as a stop loss because I know it's too small. Sometimes it works and you have a big trade and you take, but the likelihood of that maintaining that level is not, I don't want to risk my money too much doing that. So I want to either take the next level of structure, which in this case, my level of structure, if you see what price did here, oh, I'm using the wrong, let me change that. So if you look at what price did here, price went up to this level here, the highest level there was there, and then it came down, right? And then it went up into our wave, and now it has moved down. And what we want price to do is, no matter how long it takes, we want it to come back into the wave somewhere in those areas there. And then we want to follow the price down. So our level of the structure level, the closest structure level from above this level here is this one here. So this area here is my area, my closest structure level. In this case is a ceiling, which is a resistance. Yeah. So let me clear up all this a bit. It's too busy now. Okay, I didn't know I could do that. Oops, I'll be deleting. Right, so, oops, no. Okay. Right, so based on that, then, if I wanted to put my structure, my level of stop loss around there, I can, which will make my stop loss what now? My stop loss will now be very wide. But just for illustration purposes, those are the ways you've got to think about these things and not just hope that price will not hit 5 pips. Or maybe you can say, okay, instead of doing 5 pips, maybe I will go 15 pips. Which in reality, that is actually exactly from my entry level. That will be equivalent to about 15 pips, you see? So I'm just gonna go for 15 pips instead of the 5 pips, yeah? So if I went for 15 pips, it means that my calculation then here is that my stop loss pips is equivalent to 15 pips. And so if I then get my formula again to calculate my stop loss and my lot size to make sure I'm only risking 1% of my account, my lot size will be equivalent to lot equal to risk, dollar risk, divided by stop loss pips times pip value. I'm just going to call it PV, pip value. Yeah, and that is equivalent to my risk in dollar is what? $12. So I'll just put 12. And stop loss pips is 15. So my bracket 15 times pip value, which is 10, which is equivalent to 12 divided by 150, which then finally will be equivalent to, let's do some maths on the 12 divided by 150 calculator. It is exactly 0.08 lots. So that is 8 micro lots. So based on that, then it means I want to take a trade of 0.0. Oh, you are not seeing this, right? Oh. Right, it's here, lots equal to, so that's where I did all my calculation. Were you seeing that when I was doing it? Yeah, but it's clear though. Feedback, please. Yeah, why or yes, why in the chat or yes. Let me know you're with me. Awesome, thank you. Thank you. Right, so that means if this trade, what I'll then do in this case is I'll place a pending. What type of pending order will I place? Because price is currently here, so this is the so this is current bid price being displayed by the platform, and where I want to enter is up here, but I want to take a sell trade. So what kind of pending order should I be using in this case? Who will attempt? Yeah, will anyone attempt? Irene, I see your message. That's fine. Will anyone accept? So how many types of pending orders do we have? You said sell stop. Good attempt. Thank you for saying that. But I'm going to do something now quickly to also clarify that. So we have the numbers there now. We know it's 0.08 on this one. So let me just clear some of this. So we have some free space on the chart. Now, I'm going to clear this one too. Now, in general principle, remember that pending order is when we want to take a trade at a future time and at a future price. Yeah, that's what pending order is. An instant execution. So if I go into a new order now, we have down here the type of order: instant execution or pending order. Yeah, so instant execution is I will take the trade at the current price and at the current time. Pending order is I want to take the trade at a future time and at a future price. In particular, a future price. When you call it future, it's already the time is in the future. So it's really at a price different from where price is currently now. So at the future price. Yeah, that's the important thing. So in this example I have here, this is where price is currently 0.6757. This is where price currently is, but I want to take a sell trade when price comes here. So that means price needs to make a backward move, go up, before I then take a sell trade to come down. And so that leads me to talk about the types of pending orders we have. So if you go back in here and you say instant order, pending order, yeah? When you get to pending order, you then have types of pending orders. You have broadly two types: a limit order and a stop order. So you have a buy limit, buy stop, sell limit, sell stop. Yeah? Now, what is the difference? If I want to do a sell trade, and typically for a sell trade, my expectation is that price will move down for a sell trade. Yeah, because that's how I'll make money if price is moving down. So let's just assume that price is at this level here. So this is an entry level. If I take an instant execution will allow me to take a trade here, and then I'll follow price down and make money if price goes down. It doesn't move in a straight line like this, but yes, it goes down and I make money there, right? That's instant execution. What if this is where price, current price, so I'm going to call this CP, but I want to take a sell trade when price has actually moved down to around here. So this is where price is, but I only want to take a sell trade if price moves down, makes up, down move, makes up, down move, makes up, down move. These are all small up, down moves. And I only want to take a sell trade when price gets to this level here. So future price, which will be my FP. That'll be my FP, yeah? So this is gonna be, for me to make that decision right now at current price, it means that I'll be taking a pending order, yeah? But the pending order I'm taking is going to be somewhere lower than the current price, and I'm looking to take a sell trade. In that case, what I will do is take what is called a sell stop order. This is what you said, Mrs. Remy. I'll be looking to take a sell stop trade at a future price that is lower than the current price. Is a sell stop I have to take. Please don't forget that. If instead I'm expecting price, let's do this. If instead I'm expecting price to, instead of coming down first, if price then does this, this is current price, and if price does this instead, and my idea is to take a trade when price actually has gotten to somewhere higher and follow it downwards. The kind of trade I would take there, say if I was gonna take this up here as a future price. So if that was meant to be the future price I want to take and then follow price downwards, the kind of pending order I will use is called a limit order. So it's going to be a limit order. Are you with me? Have I lost you, or are you still with me? Have I lost you, or are you still with me? Feedback, please. I hear you. I hear you. Awesome. Awesome. So then, if I ask that question I asked originally first, again, in this, so based on, oops. So based on this, then, what do we think? What do we think the, okay, Irene just joined back. What do we think? What kind of pending order will I take? This is where current price is now, remember. Current price is just here at 0 point there. And I'm expecting what to happen. I'm expecting price to go back. This is what I'm expecting price to, I can't control it, but that's my expectation. And then when it goes back, I want to then take a sell trade at that level downwards. So what will that be? What kind of pending order will that be? Will someone, based on what I've just explained, what kind of pending order would that be for a sell trade? Yes, Moses. What do you think, Mrs. Remy? Ah, yes. That's what I want to hear. That's what I want to hear. That's it. It is going to be a sell limit order. You get it right now, yeah? Thank you for that. I'm happy you get that now. So that will be a sell limit order. So I can place a sell limit order. I can then go here and just go new order. It will be pending order. It will be then sell limit. And I want the entry price to be 0.6764. So my price would be 0.6764. And at this stage as well, I know we've not talked about targets and stuff, but we will. At this level now, I also want to do 0.6769 for my stop loss. So I can come here then and type 0.6769. No, okay, no. We're going to go 15 pips, weren't we? It was going to be around here. It was going to be around here, wasn't it? So I got that wrong. So it should be 0.6779. 0.6779. And all you just then need to do is, you can also set this to expire. So if you want it to expire at the end of the trading day or after a couple of hours, you can then enable this. So select that, and then you can see it has my date, today's date as default, and the current time when I open that dialog box. And so I can then make it 23:55. So at the end of the closing session, close me before the next day starts. Or I can decide I want to close it on the 2nd, if the trade doesn't trigger, on the 2nd by 10 a.m. You can change all this. You can also use the calendar. So I can decide if that trade hasn't been filled by the 3rd at 10 a.m. or by 2 p.m., which would be 14:00. So you can do that, and you can just hit place. Market is closed, so we can't do it now, but that's exactly what will happen. Okay? Did that make sense? Feedback, please. Yes, thank you. Any questions? It's been me talking. Any questions? Let me get me some water. Any questions? Irene says, do a video, please. I think this should be recording, so maybe we will have it sent out later. Let's see. I'll probably be able to. Yeah. And Moses says, I noticed the gap up situation on the chart.
November 22:30.
Right. Where is this gap up situation you're seeing, Moses?
Around November 22, 23. And it's November 22:30.
I'm going to pause you, Moses, if it looks like the conversation you're having is not here. But where is the gap you're seeing? Because I'm not sure where it is.
It's another.
November what? 22:30. Which one is November 22:30?
We are outside now.
Here.
Yeah.
No, that's, where is the gap? There is no gap.
There. Sure. Looks like a gap.
22.30.
After the major. Yeah.
Here. Where is
Yeah.
the gap?
Yeah. It's a gap. So it's here. No.
Let's just get this. Let's just get this right. Let me increase this.
I mean, am I?
Right. So what gap are you seeing in this particular place? Where is the gap?
Is it?
There is no gap
Okay.
there.
Has disappeared.
There is no
There
gap.
is
Now, let's be clear on this now. Let's be clear on this. The candle, the prior candle is this, right? That prior candle is a green candle. And in this, my chart, a green candle represents a bullish candle. And a bullish candle has the close price above the open price, right? Are you with me on that? So the close price of that one is here, right? And the open price was here, and the close price was there. Now, the new candle, being a red candle, eventually finished as a red candle, but it opened at the same place. So that can be a gap. If you were telling me that this being the close here, in this example, this was a close here, and then the next one opened here. If you are telling me that, then I'll say, yes, it is like a 0.1 pip gap, which I will not touch. I only touch 15 pip gaps or more.
Okay.
So if you had said that, then I'll say, okay, yeah, you've got a point, but that wasn't what you were saying. So that there's no gap there. Remember, gaps happen when the open of the current period is significantly different from the close of the prior period. So in this case here, this would be the current period. The open of that current period was up here. The close of the prior period is there, almost the same price, so there's no gap. Is that clear? And by the way, I tend, even though you can look for gaps on every time frame, my approach to trading isn't to be trading every minute, every 10 minutes, or every 15 minutes, or every 20 minutes. So I don't trade gaps on smaller time frames. I only look for gaps on the daily time frames.
Oh, okay. Okay.
That is me. Doesn't mean you can't
Yes,
look for it on other time frames. But I don't trade anything because I don't look for gaps that are less than 15 pips. That's also a tiny gap there. So the close was there, the next candle opened there. So that's a very tiny gap, but I won't touch that. And obviously you can see that that wasn't a profitable trade at all. Yeah. Mr. Remy, you said, is there a specific time frame for the wave band? I tend to trade the wave band on two particular time frames. Two particular time frames. Yeah. And those two particular time frames are M15 and H4. Yeah. But I've been running some tests over the past week on M30 as well. So what I would say is anything from M15 to daily. If you're doing it on daily, it will take you days and days and weeks for opportunities to actually mature or begin to give you results. So you've got to bear that in mind. So anything from M15 to H4, I will touch for the wave strategy. Does that help? Awesome. Awesome. Okay, so yeah. So any questions? I like when you ask me questions because it just helps me. I've got the knowledge, I've got the experience, I've got all those things. Without understanding where each of you are at, it can help me. I can't really help out with what I know. Which currency pairs should we watch out for this week? Watch out based on what? So it all depends on what we're watching out for. If I'm looking to take gap trades, obviously on my daily time frame, you cannot know what gaps are opened until the market actually opens. So you can't watch out for nothing on the gap system until the market opens. Like it's going to open in 24 minutes. So that's the only way we will know if we've had any gaps or not, in 24 minutes. Yeah. But if you're looking at other strategies, like say the 5TT wave. So what I will normally do then is I don't trade this every time, by the way, but there are more opportunities coming out on this than on the gap, because I look at this at the 15 minutes H4 time frame. So if, for instance, I come here now, what I would have done is I would have said AUD USD 15 minutes time frame, H4 time frame. You can see that on the H4 time frame down here, that there is a potential that price will come back. So all the rules are met. So if we had checked this out, is this AUD USD? I actually took this trade. I took this trade though. I took this trade last week. Probably not here. I took it probably around here. I think I took it around here. So this would have been a 20-something pip trade, which was nice. But right now, price is set up. So this will be one that we will want to watch, because what you want to see happen with this is you want to see price, maybe to go down a bit more, doesn't really matter. But what you want to see is that price comes back to the wave when it forms towards this area here. And you want to be placing your limit order and just tracking this wave. So in reality, that wave might actually then form here. I'm just going to extend it. So that's the wave. Yeah, so that wave will probably go down like that. And so what you want is for price to come back at any point, really. At any point, it might happen. It might happen somewhere here that it comes back here. But wherever it happens, what you want to do is just to be tracking. And the reason I'll trade on 4 hours is because it will give me more time. If you've got a business or you've got a job that you're doing and you've got to go out and do certain things, 4 hours is a long time enough to allow you to be able to come back and check. So maybe initially you place your limit order there and you walk away. Then you can come back a couple of hours later. In reality, where I put it now is not where it should be. So right now, I'll be waiting for price to come back around there. So I can place my limit order there. Then if after that candle closes, nothing happens, I can track the wave down there. And I just keep tracking the wave. Deleting and opening new ones until price eventually then comes, fills me into that trade, and I then want to follow that price to the downside that way. And did I explain that okay? So Moses, this will be one I'll be watching. Doesn't mean I'll have my journal with me, and then I'll say, okay, AUD USD H4 time frame, watch out for some potential sell in the next couple of hours. So by the time I wake up from sleep, I'll check that to see if price has moved up and filled me into the trade. Did I help you? Yeah, so that was AUD USD. Then USD CAD. USD CAD, we were already on this trade. I've closed 75% of this trade in profit. So the first one we closed around 15 pips in profit. Then the second one I closed, I think it was around 20 pips, something like that. Closed at about 20 pips in profit. And then the third one is just only 0.03 left now. And it's just, yeah. So as long as my stop loss hasn't been hit, I'm still live in this trade. But at least I've closed 75% of the trade in profit. So even if this comes down, hits my stop loss, the net profit and loss will be a profit on that trade. But yeah, it is what it is. And this was on H4. So it takes a longer time for all this to develop and happen. But it is what it is. It's taking 2 weeks now, isn't it? For this to happen. But I've taken profit along the way. Some people don't take profit along the way, but I do like to take some of my profit along the way. USD card, that's one of them. Euro GBP. Oh, Euro GBP, that was another opportunity that if you were tracking it, you'd have got into that trade around here. And that trade would have been, would have delivered over 20 pips on H4. What of M15? You can see what's happening here on the M15. It is not an opportunity because it was just pulling data from the system. Right, so this is not an opportunity. This may be if you had entered a limit order here and put your stop loss up here. Let's see how many pips that would have been. If we entered here, the stop loss would have been just 5 pips. You see why I don't like to use 5 pips? Because this is just merely 5 pips. You'd have been taken out of that trade unnecessarily. So in reality, my stop loss should really be around either that level or that level there. Yeah, if I'd gotten into that trade. But yeah, this is not one to watch. It is dead. That one doesn't have any opportunity there. USD CHF. No, there's no opportunity there on the M15. Is there some? There was, and there potentially is still on USD CHF. If price can come down to this level here. If price comes down to this level here, then I will be taking a buy trade. So price needs to do this, come down here and then buy trade and follow trade to the upside. Because one thing you've got to realize is happening with this is, I hope you see what is happening here. The price is making an impulse leg, a retracement, impulse leg, retracement, impulse leg, retracement, and you now want to take that impulse leg up. So that's the principle behind this strategy. That if you catch a trend, you need to spot where the impulse retracement. Now, why you use these bands is these bands help us determine these areas of potential bounce. That's why we use the bands. So some people will use various things. So you will see people that will use, let's take, oops. Some people will use various other things, like some people will use Fibonacci, and I use a combination of them as well. So if I wanted to see where this might bounce, I've put this on here, and this was at the time, that would have been the level where price would have been turning back. And so I would have said, okay, price might get to 23.6 and it will bounce. And so you might want to give, but usually I prefer these ones here. I prefer these three here, 38.2, 50, and 61.8. Those are my preferred retracements. Doesn't mean that price will not retrace on 23. It doesn't mean that price will not retrace somewhere else. There's another hidden one that I like. I usually will add it. Is a 78.6 around this level here. I will add it. Am I getting complicated now? Are you still with me? Feedback, please. Good man, good man. Yeah, so I prefer those ones. So I'm just gonna let that to be. Yep. By the way, if you want to change, if you want to add that 78.6, you can double click the fib, that red line. Mrs. Remy, you said why not from previous lower point in the fib? Previous lower point. Yeah, because this is my latest, remember, first of all, because I do this naturally now, I don't think about it. I'll show you what I'm doing. So look at this. So I'm looking, unconsciously looking at my levels. So I had this move here, then it came down. Then we had a tiny one up there, then it came down. Actually, this is the down there. Then it went up again, came down, right? Then this move then went up to this level, really. Yeah, so if I was going to use the fib, I will be, in this case, the first thing I would do is probably to then, not probably, the first thing I'll do is to use my last leg, impulse leg. I can use my last impulse leg to check, so that's the move up, to check where this might potentially come down to. It might come down here, might come down to this point, but because it's the fib, there is this level here that it might come down, which in this case it did, but I wouldn't have known at the time I was doing it. Or it could have come down at 38, somewhere at 38, or it could have come down at 61, at 50, it could have come down at 61.8. So it could have come down on any of those. There is no way I can tell at the time you're making this decision. But from my experience, these three here will give you more, because if price pushes down, the more price pushes down, if you are still going to maintain the up move, the more it pushes down, the better discounted price you get for a buy move. Because if price only pushes down to this level like it did and then comes back up, oops, wrong shape. So if price only pushes down to this level and then comes back and makes this move up here. Now you can imagine if this was your entry price, if this area was your entry price and you have to move only here, that means in reality, then you get from here entry, you've moved and you've got probably about 55 pips, yeah? But just imagine if it went down to 38 and you had the same move up, that's 70 pips. Or if you went down to 50 and it moved up, that's 81 pips. Or if you went down to 61.8 and then moved back up, that's 92 pips. So the more it moves down, and providing this is not, if it moves down to this level, there's a potential that the uptrend has broken and is now coming down, going down, 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 down. But if 61.8 level holds, you stand the chance of making more money on that move up. Can you see that? Let me know if you are with me. I want to know that I'm not just blabbing. I want to know that you're understanding, you're with me. Yeah, awesome. So this is the reason I chose this level here, because that was my closest impulse leg before I made the decision I made, whilst I was trying to make my decision. So I took this and price got to this level and then started to move up. Yeah, hey-ho, that's what it is. It is what it is. I can't do anything about it. And so what do? I've got to then re-strategize. But you're correct. For me to then check, in each case, you can see that it's not making massive moves. So then this should have been a small move here. And then the next move was here. And so the next time I want to check, once I see that price is beginning to move down, what I will then do is I will take this, my fib, in fact, I'll delete that one, I'll get a new fib, and I'll then plot this one here, this move up. And you can see in this case, where did price get to? price actually got to 50. So that level there is the 50 level. Price did get to the 50 level. Can you see that? Can you see that? And then what did it do? It then pushed back up, giving us how many pips? How many pips is that? Let me check. So we had about 40 pips on H4 time frame. That's not too bad. For a short term, remember this is not really long term. Short term, this is a couple of hours. 1, 2, 3, 4, 5, 6. So in a 24-hour period. So it's quite short term to make that something pips. It's nice. It's nice. Was that helpful? Did I answer your question, Mrs. Remy?
Yes, you did.
Awesome.
Yeah.
Awesome. Right, so let's keep our eye on the time. It is 8 minutes to market open. Okay, so the couple of things we've touched on today. I think whenever we have these calls, we'll do things like this. We'll just go through the basics, the fundamentals, and some learning, just to make sure that everybody is learning some fundamental stuff. By the way I've explained all this, the beauty of it for me now is that most of this I don't do manually anymore. My systems are automated. So I automatically trade all these things, which is why I'm writing the program for the 5TT wave. I'm writing, I'm testing, I'm writing and testing. So hopefully I can have that ready for January. Hopefully, let's see. And as well, the beauty of it as well is I'm opening it up to be able to trade metals and indices. So I've been able to crack that code because for several years, I've not been able to crack the code to be able to trade some of those indices and metals, but I have now. That's something that happened on the, oh, what date was that? I was in Abuja when I cracked that. This would have been on the, when was I in Abuja? On the 15th of November. So just 2 weeks ago. 2 weeks ago. I know you love metals. It's just that a lot of people have small accounts that when they're trading metals, they do not, because something like gold, you've got to have a minimum of, well, your lot size for gold. I don't know, for most brokers, I don't know the Nigerian brokers, is one standard lot. It's one standard lot, even though the margin requirement might not be huge, but it's one standard lot. You see, so yeah. So it's quite for small accounts, people are actually taking bigger risks than they should take with small accounts. If you have a not a huge account, but a considerable account, then you're not taking all those crazy risks, as it were. Okay, so that's if we're going to take an example on this, we've got 5 minutes. An example of this to calculate stop loss. So this will be my entry. I'll take my entry. I'll aim to take my entry around there, and my stop loss will be a couple of pips below the 89, which means that my stop loss. Moses says, true talk. Gold can give heart attack. Yeah, because people are trading massively exposed accounts, and that's, yeah. The rule of the game generally as new traders and non-professional traders is you've got to stay long in this whole business. And the only way to stay long in this whole business is to trade small. That's the only way. This is like an ocean. I say this every time. The market is like an ocean. Do not attempt to fetch the entire market. You cannot. Just come and take your bucket and take the amount of water that is needed in your bucket and walk away. Don't kill yourself trying to take 20 buckets. Just take one bucket you need to do what you need. Walk away. Next time, come back. Take another one. For those of you who go to church, when they were told to pick up manna every day, they were told if you take more than one day, it will destroy before you know what is happening. But some of them still did. This is just, human beings are just funny. Some of them still did. They were told, don't take more than a day. They still did. And this is what I see with a lot of my clients. Do not trade big trades, and they still go ahead and trade big trades. Anyway, it is just the way life is, because everyone wants to experience it for themselves. 3 more minutes. So how many pips is this? How many pips is this? This is, remember, this is going to be a buy trade I'm trying to get into. So this is a 36 pip. So if we're going to do that, our example again, it will be 12 divided by 32 times, this one is USD CHF. The pip value is 10.01. So that will be equivalent to 32 times 10.01 will give me 320. So that will be equivalent to 12 divided by 320.32, which will be equivalent to 12 divided by 320. But do you see how quickly I've done this? So you don't need to waste time on this. So this will be 0.037. So it's 0. I can either go 0.03 and make sure my account is less than 1%, or I just go 0.04, which will be slightly more than 1%. So let's just go 0.04. Yeah. So that's the trade size I would have used for this. And so what I'll then do is I'll just go, I'll just go new order. In this case, what kind of pending order would this be? It's going to be a buy pending order, but what kind of pending order will it be? Who is going to answer? Who is going to answer? Who is going to answer? What kind of buy pen? Oops. Remember, in this case, buy stop. If this is the current price, oh, we've got 1 minute now. Can I explain all this now? Current price, and we're expecting price to go up. If I'm going to take it somewhere higher, that's going to be buy stop. If I want price to first of all come down somewhere, and then I take the up move, then it's going to be a buy limit. So it is going to be buy limit. For the wave strategy, just know that mostly, if you're taking pending order for the wave strategy, mostly you will be taking limit orders. You'll be taking limit orders. By the way, I have a video explaining all the limit orders, the pending orders. So please, 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 please go use the videos, go watch the videos. If you do not have the app just yet, go get the app. It's easy to see those things on the app. Those videos are on the app. It's easy to get, because what I'm trying to do is to get all this my stuff I have in different places to help traders into one place where it is easy for them to get these resources for their trading. And so you can get most of my resources now on the app. We'll be adding more things to that. We'll be adding more capabilities to it as well. Oops, market is open now. But not on this broker just yet. I can hear the pig and pim from my other. So very unique app. Is that a positive thing or? Right, who is seeing Oh, plus, plus, plus. Thank you very much. I'm happy you find it useful. Right, so who is seeing any gaps anywhere? This is when, oh, there's a gap on GBP CHF. I can see that. I don't know whether it is a true gap or not. I'm looking for my, so where is my gap? Gap. My price is moving quickly now. Oh, on FXCM. On FXCM, we have quite a number of gaps. We have how many gaps? One, 2, 3, 4, 5, 6. We have 6 gaps. On GBP USD, so let's see what GBP USD is like here. So GBP USD on this particular broker is not yet open. This is a demo account. It's not, they're not open yet, so I can't even see on that one. I can hear the sounds on my phone. My automated systems are taking positions now. Oh, on Rwanda as well, we got quite a few gaps. Rwanda has quite a few. What is happening? My trades are not triggering on some of these. Everything is standstill, is it? Oh, by the way, something I say to people I'm trying to do now, going forward, is I notice that helping a lot of people, answering questions from people, I find that a lot of folks cannot, some of them don't have laptops at all. So many of them are trying to see if they can trade from their phones effectively. And you can't effectively use only phones to trade, especially if you're going to go auto systems. You can't do that on the phone, by the way. Auto systems have got to be done on laptops or computers that are constantly connected to the internet. That's just what makes it the power, it gives you the power. And so I'm trying to bring a solution for people. It will obviously be a paid service, but very, very affordable because I'm considering that it's being done in Nigeria. But I want to provide virtual machines. So virtual machines for traders who want it, where they have access. So from another computer, they can get, just like I do, my trading computers are in the UK. And no matter where I am in the world, as long as I have internet connection, I can connect to them, to my trading computer and see my trades. And so that's what I want to do for people, where they can have a virtual machine and they can gain access to it with any other computer or even with their phones. So we will have a means where with your phone, you can gain access to a computer. So, but you have to be able to use the computer like a computer, by the way, but you can have access to it if you're on the road, if you're traveling, if you're at jobs, you're not in town, or there's no NEPA light, but you have your phone, you can still know that the computer is connected to the internet 24/7 with no interruption of power or internet. So that is coming probably in 2020, next year, that will come on stream. So I'll probably be setting up a structure that can take 100 initially, and then we can see how things progress, then we can extend it to more. So it is, a lot of these things are happening in the background, because for me, all the noise I hear people making around Forex and in the market, now I can't knock people because all of them are in different places. But I am trying to see what I can do to really help people structurally, give them the real thing. Forget all the noise people are making. Just give people the structural support that they need. And because it doesn't help anybody if people learn all these things they learn, but they can't implement it because they don't want to have a computer to trade, or they don't have access to uninterrupted internet and power connections. It doesn't help. So if I can do that, at least structurally helps people, then they can learn a bit more, whether it's from me or from someone else. But if they have a system that is connected to the internet, then they can learn a bit more, is my aim. So yeah, gaps. Am I seeing them here yet? Oh, okay, the market is open now on this. You can see there's a gap down on GBP USD. You can see it, right? So that price, Moses, this will probably be for you to see. That price, the Friday candle, bullish one, closed up there. And today it opened down here. So that was a gap down, which means we are looking for price to move where? To the upside. And so that's a buy trade. So in essence, I'll just probably just as an example, new order, I'm just gonna go, this I know what I usually take for this, 0.15. Let me do this 0.10, and I'm just gonna buy, boom, that's it. So the next one I'll look at is GBP AUD, similar. So all of them are GBP pairs, so be careful that you're taking that into consideration. So if I buy that as well, buy, you see what's happened there? Can you see that this is where the current price is, and see where my entry price was, almost at the top of the gap? And what is called that? Spread. On this one, you can see that my indicator tells me I have 5.9 pip spread. So it's not too bad. And we should be able to cover 5.9 pips. Not a problem. Let's see, Euro AUD, is there anything? Euro AUD, there was a gap. You can see this is a clean gap, yeah? But why is it not a trade? Why is it not an opportunity? Price closed there, and the next one opened down there. So that's just 10 pip gap. I only consider a gap when it is at least 15 pips. Irene asked me a question. Why don't you starting people off and they pay later? Nothing should be for free. I agree with you, but you know, people are not very honest. I've tried things like this, and then, in fact, I even recently tried this. People take your stuff and they just walk away, because a lot of people are dabbling into things. They're not really committed into doing things like this. So when you give it to them for free, what happens is when they see, when the rubber hits the road and they actually see what they should be doing, which is stay committed, a lot of them pull back. And so you've just wasted time, wasted money, wasted, and time for me is the biggest thing. So I wasted time on them, and they were not really committed because they didn't really put in money in. So sometimes, yes, I want to be able to do this free for a lot of people, but I want to do things free for people who are really committed. And the only way to do it is you've got to pay. It's just the way this is. Not being unfair or not being nice. Nothing good comes. People have got to pay upfront for things, because that's what brings the commitment. Because people are attached to money a lot. So if they put their money into something, they will put their hearts in it. So that's the essence. Not that the money is not really equivalent to what they get. So we've done GBP AUD, have we? Yes, we've done GBP AUD. You can see the gaps are closing now very quickly. Oh, there's GBP CAD. Again, these are all GBP pairs. So I'm just going to reduce this to 0.05, and I'm going to buy again. Boom. Again, the spread on this is what? 11.9 pips. GBP NZD, there's a gap there too. The spread on this is 11.4, so I buy again, new order, buy. Yep. Is there another one I might want to do? So I've actually had how many of those? I've had how many of those put in? So I've had how many of those? 1, 2, 3, 4. That's it. So let's see where that is. The GBP JPY. There is GBP JPY, but again, I'm going to go 0.05 on this. But is my phone charging? Did I just get a text? Yeah, 0.05 buy. Boom. Okay, I think that is all. Let me see from here. Yeah, that is all really. That is all really. Yeah, that is all. Am I missing any? No, I've got. Oh, there is a AUD JPY. There's an AUD JPY on FXCM, and also no, it's not on Owanda. So AUD JPY. Let's see what it is on our parry. I don't know whether there'll be a gap there. But no, there is none on our parry. But you can see this is also a gap here. You can see this was the close on Friday. And then it opened up here today. And so how many pips will that be? So that situation there is a gap up. So we're looking for a sell trade there. In this case, it was how many? No, I actually did not start right. So it was about 13, 14 pips. So you see with this broker, 14 pips wasn't bad for FXCM. It probably just knocked us over by 1 pip, giving us the 15 pip, and now price is trying to move down. So in this case, we're expecting price to move down and close this gap slightly. Any questions for me? I will show you what I will do with this now. Start setting targets. Really, before I go to bed, I typically set only targets, and then the next morning I do the stop loss if my targets have not been hit. It means that price hasn't moved much that over the night. So if we go back to GBP USD, I want to close the gap because I'm manually trading. Auto trading, I don't do this. I have to manually, so I want to just take the gap. In this case, it's 20.6 pips. So that's my take profit. That's all I'll set for tonight. Then in the morning, I will probably come for the stop loss. Manually, this is me when I'm manually trading this. Automated is all done. Automated for me. GBP AUD. Oops, you can see GBP AUD, even the gap is completely closed. So I'm just going to take the minimum 15 pips on this and walk away. Not more, not less. Come on, give me the 15 pips. 14.8. No, it won't let me because the spread is what? 5.5. So we need to do a bit more. Let's go 17. Yeah, so it's allowed me at 17 pips. That's fine. GBP AUD. So GBP card. Let's go GBP card 2. This one too, we're gonna try and do 10, 15, 16 pips. That won't let me as well. So we need to do 25 pips. 25 pips. Let's just go 25 pips. But then you can also see what price has been doing around this level here over the past couple of days or even weeks. So price moved up, came here, pushed down, and never really tried to break. It tried, but it never really broke this level. So that's why I will be more comfortable even putting my take profit around here. Because it needs a bit more bullish pressure to actually push price above here and get us into a nice trading zone. So GBP NZD is the last one I want to set. How many pips is that? Let's see. Well, let's see how many pips. Okay. So how many pips is that? Oh, this one actually gives me a bit. This one gives me over 25 pips. So that's not bad. Have I set all of them? Which one is left now? GBP JPY. GBP JPY. Again, careful here. Seriously careful here. See what price did here. So price touched. I would probably consider taking this on. See price. See what price is doing here. Can you see that? Just bouncing off that same level over and over. Yeah. And now the trade opportunity is a buy. So we've got to consider that this might just be a fake out. So I'll take the minimum level of profit, 14, 15 pips on this one. Manually trading it, and I'm out. Yeah, does that make sense? GBP AUD is already in profit. Let's see what it's giving us. So it's already in a slight profit. So let's just hold it and go to sleep. Okay, so any other questions before we, it's 17 minutes past 10 in UK and 17 minutes past 11 in Nigeria and 17 minutes past 12 or 1 in Kenya. Irene, you are brave. And this is commitment to be awake by this time from Kenya is just, it's huge. Well done, man. Past 1, wow, 17 minutes past 1. Well, you do this because you run your own business and you can take a sleep, but then I guess family is there too and people will be waiting. Once it's daybreak, you tend not to just, anyway, well done. It's commitment. And I do hope it's useful, that it's time worth spent for you, that you're picking up some of these things. I know you pick up the videos and all that. This is why, get the app. I know you have the app already, so hopefully some of these things, when I get them onto YouTube, will go straight onto the app, and you can see them and watch them later. Okay, any questions before I shut me down for today?
Thanks so very much.
Thank you.
So,
Thank you. Thank you for coming. We had just a few of us today. Moses, well done. Thank you. I'm happy you found it insightful. Mrs. Remy, thank you. And Irene and Chidima is there too. So without any questions, if you've taken any trades today, let me know how they turn out. And let's take it. Let me just show my face now so that it's so we can just say good night then. Okay. So you all yeah, let me know how things turn out with some of your trades, and yeah, let's keep in touch for the week. Okay. All right. So good night all, and stay disciplined. It's a slow journey, but the rule of the game, the guys are making big money out of this, and not those guys making too much noise about this. And the guys are making too much money around this actually trade sensibly. Yeah. And so let's do the same thing. Yeah. Okay. Good night all, and have a good week ahead.
thank you.
Okay.